Hello and welcome to session 26 of Direct Tax 2, fourth semester BCom of Mangalore University. In this particular session, we are going to learn two very important aspects. The first one is the deemed income, and the second one is the format for computation of professional income. Now, what do you mean by deemed income? Incomes which are taken to be as income of the business. Knowingly or unknowingly, the SSC might have earned, and those are taken as business income. So following are taxable under the business income. Recovery of loss and expenditure allowed as deduction in an earlier year. Last year, the business had charged bad debts, and the assessing officer had allowed such bad debts. And if such bad debts of last year are recovered in the current year, then that will be taken as business income. And that will come under the category of deemed income. So bad debts of earlier year recovered in the current year will be taken as deemed income. Any profit earned by the business on the sale of assets on which depreciation is claimed on straight line method. Basically, depreciation under section 32 speaks about written down value method of charging depreciation. But if the business has charged depreciation on straight line method, any profit on the sale of such assets will be taken as income of the business. Then we have sale of asset used for scientific research. So basically these assets were purchased for scientific research, and now say suppose the project is over or in between the project has been given up, and such assets used in scientific research, suppose if it is sold, sale of such asset will be considered to be as business income. Cash credit. Suppose in your bank balance, somehow there is a credit of a significant amount. Say there is a credit of around 10 lakh rupees. The income tax officer, the assessing officer may question you as to what may be the reason, your account is credited with such a huge amount. And if there is no satisfactory answer, then such income or such credit to your bank account will be considered as deemed income. So cash credit will be taken as deemed income. Unexplained money. Suppose there is a income tax raid at your business or at your residence. And suppose after this search and seizure, the assessing officer or the income tax officer finds a lot of cash, finds a lot of jewelry, which are unaccounted for. And they question you, how come you have this much of cash and this much of jewelry kept at home? And if the answer provided by the SSE is unsatisfactory, that will be taken as deemed income. And that's an example of unexplained money. Then we have a concept of unexplained investments. Suppose you have invested very heavily in stock market, or you have bought a piece of land which has a very high market value, or you might have bought a certain property, say a structure, a building with heavy investment. But when the assessing officer questions you, how come you have had so much of money to purchase, such a property or buy such a huge tract of land or invest very heavily in stock market, and if the answer given by the SSE is unsatisfactory, then that will be treated as deemed income under the category of unexplained investments. Then we have unexplained expenditure. Suppose there is a marriage ceremony of your daughter, and amount is spent lavishly. More than 5,000 guests were invited. And while going back, each of the guests were given presents. That is for the presence in that celebration of the marriage. So when the assessing officer will question the SSE, how come such amount of expenditure was incurred? What is the source of income? And if in case the SSE is not able to provide a satisfactory answer to the assessing officer's question, that expenditure incurred through somehow the income tax officer would assess and they will treat it as a deemed income. And that is called as unexplained expenditure. Then we have any amount withdrawn from special reserve created. Suppose the business has created a special reserve out of profits unknown. And now the business is withdrawing money from that special reserve and using it, then such amount withdrawn from special reserve created in the business will be treated as deemed income and it will be taken as business income. So this is a list of the deemed income under different categories that we have. The second aspect that we need to discuss in this particular session is computation of professional income. How do you calculate professional income? The matter is very simple. We take all professional receipts. All personal receipts are excluded. All non-professional receipts are excluded. From the professional receipts, we deduct professional expenses. Professional expenses would include depreciation on assets used in profession. For example, if you are talking about a lawyer, depreciation on the building that is operating, if it's owned by him. Similarly, depreciation on, let's say, surgical equipments of a doctor, depreciation on furniture, which is there in his office. So likewise, all professional expenses can be claimed as deduction to arrive at what is called as professional income, taxable professional income. So professional receipts, then from the professional receipts, we deduct professional expenses and we arrive at taxable professional income. So this is about the concept of deemed income as well as the computation of professional income. That's all in this session. Thank you.